Hi, folks. Dan Bird here with the Daily Scan. Happy Thanksgiving to everyone. I hope you had a great Thanksgiving yesterday. Today is Friday the 28th, and looks like the rally is continuing during the shortened holiday week, which typically happens with low volume. Many times Thanksgiving week is positive. Of course, as things continue to go higher day after day, it doesn't last forever. So there will be at some point a pullback. Would not be surprised to see that on Monday, but who knows? It could continue higher. We'll look at that in a minute. I am not a financial advisor, so this is for educational and entertainment purposes only. Okay, let's take a look and see what's going on today. By the way, Stock Charts Cyber Week sale is still going on. So for those that come to my website, breakpointtrading.net, you don't even need to be a subscriber. You can just click on this button and get 50% off of Stock Charts. This is not my site. This is Stock Charts site. This is what I use for all of my charting. So let's take a look down here at the 10-minute chart, see what's going on today. Shortened day today, market closed at 1 o'clock. Right now it is 3:38 p.m. on the East Coast. And here's what the week looks like, just continuously going up. Started actually midday on Friday last week and just continued through the whole week, even the last 10 minutes of the day. Last 10 minutes of the afternoon, I should say, because the market closed at 1. But right there, had a really nice close. Money flow continuing to go up, although it is not showing a lot of conviction, which is typical during a holiday shortened week. Technology is pretty much flat. Discretionary is flat. Communications is flat. Not much going on a half day on Friday. Same with staples, utilities, pretty boring day today, actually. Not really, can't really tell much rotation one way or the other. Financials did pretty well. Healthcare is slightly down. Industrials flat. Materials flat. Energy slightly up. Not much going on today. We look at the rotation charts, growth versus value, down a little bit. Discretionary versus staples, technology, semiconductors, transports. Everybody is pretty much kind of boring today, but that might be actually good. But what you'll notice is this is the S&P. We have 4 green bars in a row. We had all these red bars, 1, 2, 3, 4, 5, 6 red bars. And then we had the reversal. The neutral bar is the blue one. And then we started the green bars. But notice how the green bars are getting smaller and smaller. So less participation. This could potentially roll over. But I'm going to show you some positive things about this. The breadth looks great. Percentage of stocks above the 20-day are now at 77%. It was way down here at almost 25% at one point. Percentage of stocks above the 50-day is at 59%. Above the 200-day is at 61%. So all of that's looking great. Bullish percent index. This is the percentage of stocks in the S&P that have bullish configurations. That is above 50%. So everything is very positive, very bullish for this week. Here's the Russell 2000, looks very much the same. Russell 2000 has had a great week. Today was pretty flat. Looks pretty much the same as the S&P. See right here, it's pretty much equal to the S&P. Mid caps, small caps are down slightly, but same with the rest of the market. Pretty boring, not much happening. Here's the breadth indicators. You can see these are all above the 50% line. That's the pink line, pink horizontal line. The small caps are the same. Looks very similar. And then the NASDAQ 100, again, had a really nice close for the day. Great week. A little bit of a pullback on Tuesday, but overall just continued to go higher. Money flow has actually turned positive right at the end of the day. So that's good news for next week. And you can see volume actually picked up right at the end. That often happens at the end of the day when market makers rebalance their books in the last 10 minutes of the day. You get huge spikes in volume. So it doesn't mean anything necessarily. When you see that at the end of the day, that's just rebalancing. But that's often, you'll see that right at the end of the day. Up volume minus down volume is green, and advancers minus decliners is above 0. So all of that is very positive. And look at the VIX. VIX, we'll look at this a little bit closer in a second, but VIX is right now below 17, 16.21. That is great news. That it essentially is an indication of volatility 30 days out. And what it's telling us is that not only are traders not that worried about what's going on, but they actually might be gearing up for a run at 7,000, which I think is going to happen by the end of the year, which is basically one more month left, since Monday is December the 1st. All right, and then breadth on the NASDAQ 100, same thing. Percentage above the 20-day is 62%, 40 still below the halfway point for the 50-day, but it's above for the 200 and just right at it for bullish percent. So the NASDAQ actually is the weaker one of all the indexes today. All right, let's take a look at, first we'll look at the dashboard. And I want to take a look at the market carpets just to see what it looks like today. NVIDIA, interestingly, was the big loser. NVIDIA and Oracle were the two that were down today. I'm going to show you the chart of all of the Magnificent Seven here in a second. But technology, everything was green except for those two. Communication services, Google was flat, Meta perking up, Netflix coming up, financials, JP Morgan doing well, Lilly pulled back. Lilly needed to pull back. It has basically just gone parabolic for, I know, at least one subscriber that sold covered calls at 1080 and thought that his stock was going to be called away. The expiration date was 12/19. That's options expiration for December. So we still got 3 weeks left to go, but right now it's below 1080. So he would keep the premium and keep the stock. I suspect that will probably continue since it had such a great run. Amazon is nice, moving up. Intel's the number one stock. Interestingly, SMCI up 3%, Micron up 2.7%. So everything looks great today. We'll go back to the dashboard and look at the individual components. Equities were up across the board, everything green except for VIX, down below 17, as I mentioned. Bonds, the 10-year bond is up slightly, but still right there at 4%. Actually went down below 4% right in the beginning of the day and then came back up a little bit. US dollar is down as well. Commodities, gold is looking really good, actually. I'll show you gold here. Gold today is really just trending higher. It's got a higher low right now, and it's just getting ready to put in a higher high. So that is a character change for gold. Gold looks great. Silver actually looks better. I'll show you that in a minute. Oil up slightly today, up 1.5%. And on crypto, Bitcoin was down a little bit, just barely, pretty much flat. Ethereum, though, was up 1.3%. So Ethereum was outperforming Bitcoin for sure today. And if we look down here at the sectors, energy was the winner. As I mentioned before, financials did well. Communication services at the bottom is healthcare, discretionary, and technology. So two of the aggressive sectors are at the bottom, but everything except for healthcare were all green today, all positive. This over here, let's see what the winners are. Texas Instruments, this is the S&P 100. For today, Citigroup, Walmart, General Motors, Berkshire, these are all the winners. Broadcom reports next week. You'll actually see that right here. So Salesforce reports on next Wednesday, and then Oracle and Broadcom report the week after that. So those are the key ones that are coming up. Now, if we look down here, Intel, again, as I mentioned, was at the top. It's also in the momentum watch list. For those that are subscribers, you can get that watch list on the chart lists page and download it into your own platform like Thinkorswim or VectorVest or any other platform that you're using. Right down here is the momentum watch list. This is a CSV file. There's 262 stocks in it. CSV file, or if you just want the top 50, you can download this one. So this CSV file can be imported into your own platform. I did a technical Tuesday on this 2 weeks ago to show you how to do this with Thinkorswim. And I use this short squeeze that relative performers are up here. These are the ones outperforming both their own industry group by 10% and the S&P by 7%. This gets updated every week. It'll get updated again tomorrow. Right now it has 295 stocks in it. So you can download that CSV if you want to use it as your watch list. Then what I do is I also check out the stocks that have a short squeeze. So 15% of its float is short, more than 100,000 shares traded, market cap over 300 million, and it's in all US stocks. And right now there's 215 stocks in the overall list, but then I combine these two lists together. So they have to be on both lists in order to make this one. So they have to be relative outperformers and they have to be short squeeze candidates. These are stocks that have a potential for an explosive move. Right now, there are 61 stocks on this list, and I've actually been starting to use this. It's actually been pretty successful. Anyway, these are all CSV files. You can download those into your own platform whenever you want, and that's what this momentum list is. Intel, you can see, is at the top. Here's Cipher Mining. This was on that short squeeze and relative outperformers list. That's one of them. Lightbridge is one of them as well. Applied Digital is one of them on that list as well. You can see how they all pull back and now they're starting to move higher. Two down, Sunrun is also on that list. This is a potential short squeeze and it is a relative outperformer. Both of those. The bottom of the list, we've got AU, that's a gold stock. There's Eli Lilly. You can see is at 1074 today. So that 1080 covered call is going to pay off if it stays down there below 1080. Symbotic was actually on the short squeeze list as well. It's on the bottom of the pack today. Oracle's down here. NVIDIA actually not looking good. I'm going to take a look at all of the Magnificent Seven here in a second. All right, so next thing I want to show you is on the charts page, I had created this head and shoulders chart using the S&P. I did this last week, but I mentioned that it may be invalid. So if it broke above the potential right shoulder, then it will no longer be a head and shoulders. Or if it did not break below the neckline, which is officially what makes it a head and shoulders, then that would negate it too. So let's see what's happening. So there's the head, there's the left shoulder. The right shoulder would have been right here. So this is Friday, that is Wednesday. So that was Tuesday. The market went up right to that level. And if it had reversed from there and started to go down, then the head and shoulders pattern would still be valid. But it didn't. It broke through it. So it is no longer a head and shoulders. I left these in here just for illustrative purposes. Not only is it no longer a head and shoulders, which would have been a bearish pattern, but it also broke the downtrend line. So it no longer has lower highs. It is now a change of character. So now it's starting to move up. Where will it move to? Well, the next level here, this is a pivot point. I did a Technical Tuesday on pivot points a couple of weeks ago as well. This one's using Fibonacci pivot points. The way you do that in stock charts is in the overlays, you put in pivot points, and then F stands for Fibonacci. So you can use the Fibonacci levels, the key levels. So the pivot is right here. The first level is 38.2%, and the next level is 61.8%. And that is coincidentally right at 7,000. So we've now got a range right now. 65.50 was just below this low on October 10th. This one here went slightly below it, but the next day bounced, so there was no confirmation. But that now is a very strong support level. The next thing to watch for is the 7,000 level, which is a nice round number and also happens to be the 61.8 Fibonacci level. So that is a natural place. Now, when we get up here to this previous high, there will be sellers that want to just break even, and it is a key Fibonacci level as well. So expect to see a pullback when we get there. Might be Monday. We likely will pull back, but then I think we will continue by the end of the month, hit 7,000, and then 7,000 is going to be a very strong resistance level. We might reverse and go back down here to the 65.50 level. We'll see. But right now, it looks extremely bullish. 5 days in a row of nice white candles. That does not continue usually. there will be retracements. You can see we get white candles, we get a retracement. Very rare do we get them all in a row like that. We got it right here. 1, 2, 3, 4, 5, 6 white candles in a row, and then we retraced a little bit. So that's probably going to happen when we get to this, back to the 6,900 level, which is the previous high and an important resistance. So expect that next week, and then expect to see that bounce. If we start bouncing between the 6,550 and the 7,000 level, then I think we were putting in a distribution phase, according to Wyckoff. And for those that are subscribers, on the charts page down here, you can see the Wyckoff levels right here. Here's the distribution phase. So I am talking about 7,000 here, 6,550 here. If we go up and hit 7,000, you can see this. Let's think of this as 6,900. Think of this as 7,000. This is 6,550. And then it will bounce off of that and bounce around for a little while. I don't know what the time frames of this will be, but at some point we'll break through 6,550, and then we will start a markdown phase. If it breaks out above 7,000, then that's a very strong bull market, and then it will be another reaccumulation phase, and we'll just start to continue higher. But keep this in mind. It doesn't say that this will happen, but just keep this whole concept of market cycles in mind, since we've had a really good run since the April low. So wanted to point that out to everybody. All right, let's go back here to the charts page, and I want to look at, actually first I want to look at the S&P. We'll do that on the market bias matrix page. Market bias matrix gets updated every day. It's already been updated for today. You can see what the trend is starting to turn green right now. This is the day over day, week over week up here. So let me actually turn on my magnifier right here. So this is a short-term, medium-term, and long-term trends for all of these asset classes over here on the left-hand side. And then consolidating all that together, you get an overall percentage. So that's the percentage that is bullish. But the colors here mean day over day. For it to be green, it has to be higher day over day, which it is. And it has to be higher week over for the last 5 days. So week over week, day over day. And that's this highlighted row right down here. So it's above both of those. That's why it's green. Short term is also above both, and it is green. The medium term is equal to yesterday's, but lower than 5 days ago. And the long term is equal to yesterday's and lower than 5 days ago. So they get a yellow right now. So over here on the right-hand side, let me turn this off. On the right-hand side down here, you can actually see the short-term, medium-term, and long-term. And these have been very consistent. Here's the actual S&P right here. These have been really consistent in identifying the trends. Even as the S&P made some short-term highs right here, the whole market, all of the market asset classes were still trending lower. So that was implying the market still had more downside left. But now they're both starting to move higher. So that's a good sign. We'll see if that continues. Let's go back here to the charts page. And I want to look at advancers minus decliners for the NASDAQ. So there you can see when the advancers minus decliners, this is the 13-day moving average, gets down here below this green line, that's usually where the market bounces and starts to go back higher. So you can see it happen right here. That was the low. It happened back here in April. That was the ultimate low. Happened here in March as well. And we got a short-term low, a little bit of a bounce, and then rolled over again. This is the 21-day EMA, this gray line right here. All right, so that's what it looks like. It looks like we are rallying, and it's right back to the 0 level. So this is important. It likely, as I mentioned, likely will hit this resistance right here and probably have a pullback from there. That'll be right around this area that we're at now, and then we'll see if it can continue back higher. Now, on the other side, it's a lot harder to pick tops using this. As you can see, it can get way up here. definitely overbought, but that was coming right off the bottom. So it was just continuing to go higher. We had a little bit of a consolidation when that happened. Up here had a little bit of a consolidation, but it just continued higher. It's much better at identifying bottoms. So that could be the bottom right there. We'll see if we can make it back to 7,000. Watch that range between 6,550 and 7,000. All right, let me take a look at the Magnificent Seven. And to do this, I'm going to use my market bias page. Nope, that doesn't have it. I know what I want to use. I'm going to use this is what I use every night to identify what the market looks like it's doing, including the Magnificent Seven. It's the bias charts for the Magnificent Seven. This will give you a really good sense. So here's what they look like. I'm just going to step through each of them, starting with Google. And you'll get a sense just by looking at where the moving averages are and the color of the bar. So there's Amazon. Looks like it's recovering, starting to move higher. Here's Apple. Apple's been very strong. Here's Meta coming off the bottom. Might be recovering. Microsoft coming off the bottom, green bar today. See how long it's been since Microsoft has had a green bar, all the way back here. Green means both the trend and momentum are positive. It's moving higher. It's been a long time since Microsoft had one. And Meta, been a long time. Meta's got 3 in a row right now. So all of the Magnificent Seven look like they are ready, other than NVIDIA. There's a couple of them that actually don't look that healthy. NVIDIA is continuing to move lower, even as the rest move higher. There's Tesla, green bar 4 days in a row on Tesla. Netflix, still a blue bar down here, but it's come up like this before, so it really needs to make a higher high. Here's Costco. Costco's trying to recover 2 green bars in a row. Palantir does not yet have a green bar, but actually pretty flat for today. Arista Networks, first green bar for Arista since way back here in October. Broadcom reports next week. It's looking really strong. Oracle is the other one other than NVIDIA. Looks very similar to NVIDIA, actually. It's actually moving lower today. Everyone else is moving higher. AMD, not too impressive. AMD needs to, again, get way up here, get above the 21 at least. Lilly, there's Lilly coming down 1075. It may come down here to the 21 day at 1,000, possibly. But Lilly is still a very strong chart right now. All right, that's it for today. I hope you had a great half a day in the market. Hope everyone had a very nice Thanksgiving. I will be updating everything on the charts and putting out the newsletter this weekend. So keep an eye out for that. And I hope everyone has a great weekend. I'll talk to you on Monday. Take care.